This is going to create fear and havoc and mayhem, as now everybody's got these extra sensitive high tensions, wondering when is the next attack going to happen. War always causes gold and silver to go up. That kind of tension will impact China in a very positive way because they own so much of it and they want the price to go up.
We live in crazy times. The prospect of war in many regions right now could drag in virtually all the global superpowers. Financial markets are on edge, inflation is stickier than most everyone thought it would be, and the cost of living crisis is driving a wedge in society. And amidst all this, gold and silver prices have surged, signaling a desire for safety in this crazy volatile world. So in light of all this, I thought there was no better time to bring Dr. Kirk Elliott onto the pod, founder of Kirk Elliott Precious Metals, KEPM.com, based out of Denver, Colorado. He's been in the wealth management business for 30 years. His firm deals in bullion to thousands of clients across the globe, and he's dialed into the sector. He understands the geopolitical events that heavily influence commodities, and more specifically, the precious metals market. And he has some of the most thought-provoking ideas on where gold and silver may be headed in the coming months and years. Additionally, Dr. Kirk has 2 PhDs, one in finance and public policy and another in theology. So let's get to the pod. Dr. Kirk, thanks for joining us today. You know, with so much going on in the world, the volatility, the geopolitics, the potential for war, it's all impacting commodities quite greatly, and gold in particular. You're dialed in geopolitically and can explain quite well the impacts that this volatility is having on the precious metals market, of course. Can you give us a quick background on your company and what you do for a living?
Yeah, absolutely. So we're precious metals dealers, gold and silver, physical, not like paper ETFs or mining shares, just actual physical coins and bars that we can actually put into people's retirement accounts if they're in the States, right? And they have an IRA or something like that. Or they can take physical delivery of it at home if it's just a cash purchase, or you can set up depository storage. Now, for people in Canada, I have tons of international clients all over the world. We can't ship across the border because you have all these value-added taxes and all kinds of other stuff. What we do for international clients is just open up a depository account in Texas where we store all the metals at the big, huge COMEX vault. You can pay for it like any other else, just a bank wire, cut us a check, but can't deliver it, right? So we have to store it. So bottom line is I've been doing that for 29 years. At this point, we're probably the largest silver dealer in North America. We focus on bullion, right? So there's not all gold and silver created equal. When you hear about all the precious metals that are booming, I would not sell rare coins, collectibles, semi-numismatics, anything that has a high premium or a story behind it. Because in almost 3 decades of doing this, I've very rarely, if ever, have found a client that's actually done okay with it. I mean, they just don't. So the general key to wealth is, number one, be in the right place at the right time, and B, don't overpay for your stuff, right? Which is why we do bullion, because bullion, it's used for manufacturing, right? So like in silver, for example, the manufacturers of the world, Sony, Samsung, LG, Tesla, you name it, the silver is used in aerospace, in defense, in electric vehicles, and fuel cell technology, and in solar, right? So when they need it, it's a global commodity. They just buy it in the bars, they melt it down, and they use it in their circuit boards or whatever. Now, the rare type of coins, collectibles, somebody has to make a market for it, right? So it's like, what if the company you bought it from is the only company making a market for a Trump coin or some kind of a rare coin, right? Well, if they go out of business, there's no market for it. And you're going to have to sell it back at melt value, and it's not that I dislike Trump. I love Trump, right? But I wouldn't want to buy his coin, right? you pay a huge premium for it. Yeah. Right? So to me, maximize your ounces, minimize your cost. It's what we do as a firm. And the philosophy of our firm is people over profit. If you focus on people, profit will come. If you ever start focusing on profit, the people will leave. I don't care what industry you're in. It's always going to be that story. We bring hope as a financial solution when the world is falling apart politically, economically, when banks are about to fail, we've got unsustainable debt, interest rates are climbing, people can't afford to make ends meet. Now you've got wars and rumors of wars. All of those fundamental forces cause stocks, bonds, mutual funds to come down because in times of crisis, people automatically, human nature, they pull in the reins. They say, oh, let's save for a rainy day. Let's not spend right now. Well, that will put downward pressure on stock markets. But those exact same fundamentals cause gold and silver to go up. Things go up with inflation. I don't care if it's a bicycle or groceries or oil or gas or gold or silver. Things go up with inflation. It's the best inflationary hedge that you can have. But secondly, as a flight for quality, as people are pulling in the reins on spending, that will put downward pressure on normal equity markets. But boy, what do? They want something that's safe. They want something that's tangible. And so in really good times, silver does amazing because the economy is booming. It's a manufacturing metal. In really bad times, it does well as a financial metal, right? As a flight for safety. It's in those kind of in-between areas where gold and silver don't really do so hot. Right, like during the Reagan years, from 1982 to about 2002, 20 years, gold went up $8. That's like why though? So it's because you look at the fundamental forces that were defining the economy at the time. The interest rates came down, the stock market was booming, real estate was booming, the Cold War was over, the Berlin Wall came down. People had no reason to look at an alternative investment class. But now we've got the opposite of peace, no financial peace, no political peace, no military peace, nothing, right? There's social chaos everywhere. And so this is one of the reasons why gold and silver are just soaring. There's other factors involved, right? Which is for the first time in a few years, you have technical and fundamental forces that are blending, and it's creating a massive dynamic for us to take advantage of. And with that, I mean, silver's up like 35% in the last 2 months. 2 months. I mean, it's incredible. But what happened? Number one is the paradigm shift away from paper money, away from fiat-based money, right? Which every country has a central bank that prints money. Well, that's about to change. So central bank digital currency is kind of the name of the game in well over 190 countries right now. They're moving in that direction. They're marching down that hill, and we're going to have it. Let's say I'm a Federal Reserve official or Bank of Canada, right? It's like, okay, I've got a deal for you, right? We've got this central bank digital currency that's going to be able to track the source of all transactions, the use of all the funds. It's going to match people's ideology with their spending. So we're going to be able to track the money launderers and the human traffickers and the drug traffickers and all of this stuff, right? It's like, well, that's amazing. I would love that. But the flip side of the coin is, according to the World Economic Forum, this is programmable money and it's tied to your digital social profile, your social credit score, your ESGs. And if your ideology doesn't match up with theirs, flip of a switch, they can cut you off from your bank account. What the Bank for International Settlements has done, which is unified ledger. So what they've done with digital money, you can do a lot that you can't with paper. So because everything's trackable, it's like Big Brother in your bank account, unified ledger takes anything that you have title to, whether it's a house, your checking account, savings account, brokerage account, and they pack it into a bundle. And with the flip of a switch, it's programmable. They can change the ownership. And then Project Icebreaker says, we're going to do real-time transaction monitoring of every person at every bank in every country. Well, why do they need real-time transaction monitoring? So they can test the ideology of the use of the funds. So you take it one step further. And remember in 2008, 2009, massive collapse. Lehman Brothers and Bear Stearns went under. What happened after that was they changed the rules for bankruptcy for financial institutions because they had to. So those two companies had so much derivatives debt that they needed to pay off. and so did other companies, other financial firms, that they said, how can we do this? Well, we need more collateral to pay off our loans. So let's just say I were to say, okay, I know Aaron's got this cool car in his garage and I need a loan and I'm going to use his car as collateral to get a loan. And you'd say, what? It's not your car. You can't use it as collateral. Are you joking? It's like, well, banks can't use your checking and savings accounts as collateral either if they don't own it. So they changed the rules to now everybody who has, in basically North America, who has a checking account or savings account or a brokerage account, you are no longer the owner of those accounts. You're the beneficiary of those accounts. We changed ownership to them so they can now use your assets as collateral to pay off their derivatives debt. That's the basis behind bail-ins, which we saw in Cyprus and Greece, where the government said, we're not going to bail out these failed financial institutions. We're going to leave it up to the taxpayers to do it, right? Or the people that have the accounts at these institutions. Well, that's what a bail-in is. It's just skirting the issue and putting it away from a government bailout to an individual bail-in. How do you successfully navigate through that? How can I have a smile on my face with all the bad news I just said, right? Well, because all of us can. You know, we can't change policy with a singular voice. I mean, it takes one singular voice to be bold and courageous and speak up, and then you get the masses to kind of come in and you become very loud and you can change politicians' mind, right? But financially, you don't need a big, loud, collective voice. It just needs a still small voice in your head saying, all right, I got to make a change. I'm going to make a change and I'm going to do it. You don't need anybody else's approval to do it, right? So when you see the stock market starting to fall, when you see revenues coming down, when you see governments that have unsustainable debt that they can't pay off, well, then do something different. Get out of the things that are going down and go into the things that are going up that are private, right? Privacy is a big, common thread that we've been talking about in this conversation. And so you have a private asset like gold or silver that you take delivery of. It's not digital. They can't flip off the switch, right? So that's one element. But the second element is absolutely not have anything to do with privacy or financial freedom. It has to do with growth. The growth is being caused by governments throughout the world overstepping their bounds, right? And it's the shift of wealth from the West to the East. So you've got the BRICS nations, which have been BRICS nations for a while. I mean, this isn't anything new, but when the Russia-Ukraine conflict started, President Biden in America basically said, okay, I'm going to stick it to Putin. And I'm going to do the nuclear economic sanction on him and cut him off from the SWIFT system, which SWIFT is the mechanism that causes banks to actually be able to send wires and receive wires to each other. If you're not part of SWIFT, you're not getting any money, right? So Biden thought he won. Well, Putin's smarter than Biden, sadly. He goes to China and says, hey, Xi, we got a problem. Biden cut us off from the SWIFT program, and she says, oh, it's okay. We have something called CIPS, C-I-P-S. It's similar, but it's only for the BRICS nations. So why don't you join us? It's like, okay, great. We have to feed our people in Russia. Let's do it. So they now have the ability for bank wires. But what the West lost was the ability to monitor all these transactions from these rogue nations, right? But what they created was a superpower economic and political union, which was a union before, but now it's connected at the hip, right? So the BRICS nations now were put on steroids, politically and economically. And on January 1st of this year, they added Saudi Arabia, the United Arab Emirates, Iran, that's an interesting one, Argentina, Ethiopia. I mean, 6 of the 9 largest oil producers in the world are now part of BRICS. And what did BRICS say? Back in August of last year, Putin tipped his hat to what was going to happen. He was all smug about it, but he's smug to begin with. He's a narcissist. But this was especially smug, right? Because he said, we're going to de-dollarize the world, and it's our objective, and it's irreversible. Those are fighting words there, but how can he have so much confidence? He knew something that we didn't know. And he knew that 2 days later, they were going to add all these oil producing nations into BRICS. That's how they're going to de-dollarize it. And they're going to say, okay, 70% of the world's population is now in the BRICS nations. You're not paying for oil with the US dollar, with the petrodollar. You're going to pay for it in your own currency. So that builds up demands for their currency, diminishes demand for the US dollar. And so here we go. It's like, well, that's the only reason we could have $34 trillion worth of debt in America was because we had built-in demand for our currency. Putin just took it away. Brilliant move, right? Again, I'm not saying I like it. I'm just saying it was a brilliant move. So now they are the controllers of their own destiny. They want to be the world's reserve currency. So they've got the political might, the economic might, the manufacturing might. But what the problem is, they still have the US dollar as the big kid in the sandbox. But they just diminished the need and demand for the US dollar while they increased the demand for their own. In one fell swoop, they basically became the world's reserve currency, which means what? Means when we want to raise the debt ceiling, when we want to fund entitlements, same thing goes in Canada, right? I'm talking about America because that's where I am, but same thing holds true for you. When you want to create any kind of stimulus program, fund entitlements, retirement plans, fund the government, if you don't have foreign demand for your currency, you're forced to rely on tax revenues, which we don't have enough. So then you have to print.
Well, this is exactly it, right? And here in Canada, we don't have the luxury of controlling the world's reserve currency. So seemingly every year now, the government is pressing harder and harder on generating more tax revenue. Matter of fact, just yesterday, it was announced in our federal government budget that they will be increasing the capital gains tax rate for corporations, as well as for individuals who generate more than $250K in a year through capital gains. So the rates will be going up in those scenarios. And we're still going to be in a deficit. And all the while for the last, 10, 15, 20 years, we've seen our productivity rate crumble. So I don't know how this is all going to, work for Canada. And I don't know how, increasing capital gains rate is going to help with productivity. We got a big problem. Our debt load is just absolutely massive now. And it's seemingly an unfixable problem.
Well, really, without the petrodollar, we're no different than Canada now. We don't have a reserve currency either, right? So when you have expenditures and you have entitlements and you have all the stuff you need to pay. So if you look at Biden's budget for this upcoming year, $7.3 trillion is what they're spending, and they're only going to bring in like $5 billion. Well, it's like, man, $2.4 trillion in the hole, and people think that's a good budget. It's like, give me a break. But this is what they just do. The problem is in the past, they've gotten away with it because we're the reserve currency. We're not anymore, right? This is where inflationary spirals start to happen, like in Argentina, Venezuela, Zimbabwe, other countries. Even in Turkey right now, they just raised their interest rate to like 50% to try to slow it down because their inflation's way more than that. So this is what happens, though, when you don't have a reserve currency and you have no discretion on the printing of money. Every country, I don't care who you are, will go down that same fateful path. So here's where I think things get a little bit different in the paradigm for gold and silver, right? So throughout history, the West, basically based out of London and New York, have basically owned the vast majority of precious metals in the world, gold and silver. And so when you control anything, just like the majority shareholder of a company, when you control, you can actually fix the price. You control it. So they wanted to suppress the price of gold and silver because rising gold and silver prices is a slap in the face against their banking system and their own fiat currency, right? So they wanted to suppress the price so they could get away with their debt-based financial system, right? So, but over the last couple of months, it's come out that the East now has the majority of precious metals ownership in the world. So what is China trying to do? They're trying to be the world's reserve currency. They want to back their central bank digital currency with gold. So it's opposite motive, where the West wanted to suppress prices, where China wants to have gold and silver prices go through the roof. Well, the Shanghai Gold Exchange doesn't allow for short selling, so they're changing these rules. And So unofficially, China has probably 30,000 tons of gold backing tons, like tons. That's a lot of gold, right? Officially, they have 5,000 tons, but the numbers don't add up for their official numbers, which doesn't surprise me. China lies about everything, right? So they're the largest gold miner on the planet, and they sell absolutely 0 ounces of gold. They're the largest purchaser of gold on the planet too. So they're the largest miner, they keep everything, and they're the largest purchaser. 5,000 tons doesn't add up. They've got plenty more than that. Here's where they've now, after last weekend, when Iran attacked Israel, right, with 300 drones, it's like something didn't add up in my head. It's like, they got to be smarter than that. These drones are low flying, slow flying with lights on them. Israel's going to destroy every one of them, right? If you wanted to, you do a sneak attack or you use ICBM or something that's harder to get.
Yeah, something was odd about that whole attack by Iran. You know, if I'm Iran and I want to attack my sworn enemy in Israel and supposedly do maximum damage, why would I announce days prior that I was going to attack the country? It just seems so bizarre.
I know it didn't add up, right? But I think this was an economic thing, because now that Iran is part of the BRICS nations, when you create fear and chaos and turbulence, it's going to cause gold and silver to go up. And now that they're part of the BRICS nations and they want gold and silver to go up to back their currency, it's like these kind of things really start to make sense economically when they're in coalition together, right? So Russia didn't condemn them. They said, oh, you shouldn't have probably done that, but there's no teeth behind it. China didn't really say much of anything. Biden, oddly enough, said, we're going to back Israel at first, and then he changed his mind after the G7 meeting. So they're getting away with it, but this is going to create fear and havoc and mayhem, as now everybody's got these extra sensitive high tensions, wondering, when is the next attack going to happen? Is Israel going to retaliate? War always causes gold and silver to go up. That kind of tension causing gold and silver to go up will actually impact China in a very positive way, because they own so much of it and they want the price to go up. All the fundamentals, all the technicals are now adding up, blending together. They're all like one cohesive unit. They're running parallel with each other, and it makes sense. So we can minimize our risk, maximize our return. That's the motive of every investor on the planet. And different times in history, the answer to that, how do you minimize your risk and maximize your return, could be something different. During the Trump years, it was stocks. During the Reagan years, it was stocks. During the Reagan years, it could have been the bond market too, or real estate. Right now, it's none of those. It's gold and silver.
So I've kind of noticed a trend now, because a lot of our subscribers are precious metal investors. Ages range from 25 years old to 70 years old. They're still speculators, but they do have a penchant for hard assets. That's their focus. I think we're in the early innings of a total mindset shift on how the public views fiat currencies. I think, as to your points earlier, they're waking up to the crisis. And as a result, I think that's changing how they view precious metals. They're viewing them as currency, as a store of value, stuff that we've always known, but the masses are starting to pay attention to. And I think a great example of that is what we're seeing at Costco with their raging monthly gold sales, estimated at $200 million now. It's great to see, but it's wild. So I kind of wanted to get your take on, what type of clients are you seeing at your bullion shop these days? Is it the high nets? Is it the savvy investors? Or is it just a broad spectrum now? Has it changed from, say, 5 years ago?
Some things never change, right? So the general makeup of our clientele, the demographic, is about 60% women. When they hear me talking on all the different TV shows, it's like, I trust this guy, I like him, this sounds safe. I don't feel safe with the stock market right now, right? And I would say almost all of them are 55 plus, like 90%. Income wise, they're all over the place. My smallest client, maybe Little O Widows from Kansas, gave me $300, and it was literally 100% of her portfolio. 100%, and broke my heart, right? But yet she's being a wise steward with what God has given her. And now over the years, she keeps adding a few $100 here, a few $100 there. And before you know it, she's calling me crying saying, I can't believe I have as much as I do. It's like, no, it's so sweet and so special, right? And then, on the other end of the spectrum, billionaire clients who will give 10 plus million and they don't even know what's left their pocket, right? It's like, oh my word. Right. So, but everybody in between, the political makeup is where it really starts to deviate. I would say 100% of our clients, 100% would be conservative leaning. It's just a different mindset. It's like, it's not necessarily a distrust of government, but it kind of is. It's a distrust of paper. They want truth. They want transparency in their own way. They want something that's different outside of the norm. And so I think people throughout the world are gravitating towards that. Precious metals are the purest form of truth. For example, in money. So for example, China wants a central bank digital currency backed by gold. What if the Venezuelan bolivar did too, or the US dollar or the Canadian dollar? So all of these currencies can have political risk, exchange rate risk. They can have a lot of risks associated with them. But so you don't want to invest in currencies. But if all of those currencies were backed by gold, you buy what they back their currency with. There is no political risk. There is no exchange rate risk there. You're buying the backing of a currency and you reduce your risk by going into the same thing that they would want, right? So even here in America, fiat-based money is going the way of the dodo bird, and people are wanting a different solution. Like individually, we could just buy gold and silver to barter with, but states now are using their states' rights. Texas in May is going up for a vote to have a state-chartered central bank backed by gold to get completely out of the federal system. Oklahoma is going to do the same thing. It's proposed in Florida. So these states are rising up, pulling out of the federal bureaucracy, the government system, the big Fed system, going to states' rights. This is where we start to see dramatic change. But what is the common denominator for all of those? There might be different banks, different currencies, same backing, right? Which is gold or silver. So
what's the actual reality that they're going to be able to pull something like that off? Or is this just posturing to kind of warn the federal government, like, hey, dial it back, chill on the spending, let's get back to sound money?
Outside of a surprise, I think it's a done deal in Texas. They've got the state house, they've got the state senate. They just missed the legislative deadline in the last session to vote for it, so they had to wait till this time. But I think they have the votes, right? So now Oklahoma probably going to do the same thing. The governor of Oklahoma is a former banker, seeing the need for it. There's a lot of push there. Florida, I have no idea. And a lot of it is just going to be posturing, right? To get votes during an election. It's like, we're sick of the federal government. We want something different. And it stands no chance of winning. But I think in Texas, it really does stand a really good chance of winning. And I think once that happens, other states are going to follow suit. Why? Because from what the legislation shows, you can't open up a bank account there unless you're a Texas citizen. There's going to be so many or a resident of Texas. There's so many people they're going to say, we want that, that they're going to move there. And other states competitively then are going to try to start to do the same thing to get taxpayer dollars into their states. So this is where the founding fathers of America, back in the day, they didn't want a central bank. They wanted competition of currency. This is it, right? This is true competition of currency when states can issue their own currency.
Right. Okay, one last question I want to talk about. One last topic I want to discuss is Larry Fink came out I think it was last week, and said if we were measuring inflation how we did back in the 80s, it would be hovering around 10% right now, 10 or 12%, I think he said. It's interesting because I don't think America can beat this inflation with higher interest rates. Why I say that? Even Janet Yellen came out and said, one of the core contributors to inflation in this country right now and why it's so sticky is shelter costs, rental rates, and so forth. But those are exactly the type of things that go up in price and cost more when interest rates go up. So what I'm trying to get at is you see this environment, sticky inflation, you compare it to the 70s. Okay, this is going to be around for years, I suspect. I can't see gold not going to $6,000 or $7,000 an ounce in the next, call it 7-8 years. And silver probably doing likewise will increase, maybe 150, 200% in that time as well. Am I wrong to think that? And what do you think about the stickiness of inflation and the correlation with gold and silver prices?
So inflation is really sticky, and Fink is right. I mean, so this is what I did my dissertation on. The first one is developed a new methodology for measuring inflation because the BLS is wrong. They arbitrarily do substitution. So my numbers are very close to his. My numbers today would be 12 to 15% using my algorithm, right? So he's right in the ballpark. He's just saying it now. I've been saying this since my dissertation in 2007, right? So they always understate inflation for political reasons. So that's number one. And the reason why this is important, there's two reasons actually. If inflation's really at 12 to 15%, not 3.2, right? Well, if your investments aren't getting more than the inflation rate, you're falling behind every single year. Number two, using interest rate policy to slow down inflation, it's quite simple. The interest rate policy has to be more than inflation rate. Officially, in the late 70s, inflation was 14.3%. They jacked up interest rates to 18. It's like, imagine getting a 30-year mortgage is 18% today, you'd flip out. But that's what they had to do to slow down inflation. They knew it. They knew it then, and they know it now. So this is why I don't think interest rates are stopping anytime soon. Because unofficially, inflation's at 12 to 15%, and interest rates have to go north of that to even make an impact. So interest rates have to keep climbing. There's no doubt in my mind, which is why, the Fed, Jerome Powell and Janet Yellen have both said, well, we're going to have 2 to 3 rate decreases this year because we've won the war against inflation. But yet, what have they done the last 7 months in a row? Paused. They haven't lowered. They haven't raised because they have a huge catch-22. If you lower interest rates and you haven't killed inflation, inflation just persists even more. If you raise interest rates when we're in debt up to our eyeballs, you create the biggest recession/depression in U.S. history. So therefore, they don't know what to do. So they're just pausing. See, that tells me they know they haven't won the war against inflation, or else they'd lower them. So they pause. They don't know what to do. So I think we probably will get one rate reduction right before the election, because then people say, look, they do know what they're doing. They're lowering interest rates. This is great. But then after that, they're going to have to raise them because inflation is still rearing its ugly head.
What does that mean for the price of gold and silver? Let's say, and I know predictions are tricky with timeframes, but let's say over the next 24 to 36 months, where do you see gold and silver going? If you had to pick one, I think I know what the answer is, but what would it be?
I'll tell you what the big banks think. So Bank of America thinks that gold is going to hit $3,000 an ounce. Goldman Sachs thinks it's going to hit 2,700, and UBS think it's going to hit 4,000 on this run, right? So at the ratio that we're at today, at 80 to 1 silver to gold, even at 3,200, which is the average of those three numbers, $3,200 gold, that puts silver at 40. The historical average, though, gold to silver ratio is 20 to 1. So we get to 20 to 1, that puts silver at 165. If gold only goes to 3,200 an ounce. But I'm with you. I think it goes much higher. Banks are notorious for understating the growth of precious metals. So I think you're right. 5 to 7,000 is my range too. So you start looking at some of those numbers. It's like, man, 80 to 1, 60 to 1, 40 to 1. I think silver probably, and again, I'm not God, I don't control the markets, but I'm just looking at history and the trends, right? Silver could easily be $150 an ounce, with gold being 5,000 to 7,000.
And you're basing that on what? The supply and demand imbalance? So
you look at the COMEX available inventory, it's down 70% over the last 18 months. 70. So 70%, 18 months, that's declining at about 3.8% a month. You stay on that trajectory with the 30% that's left, silver runs out in 8 to 9 months. Well, what are the manufacturers of the world going to do if silver runs out and Sony needs it to make TVs? They don't care what the price is. I'm telling you, they don't care, because it's not like a big 65-inch flat screen TV is made of 100% silver. No, with a little bit of it in there to make the electronic components. They don't care what the price is because they're just going to pass it on to the consumer, but they need it. So they'll say, we'll offer $50 an ounce, $80 an ounce, $200 an ounce. They don't care because we're going to ultimately pay for it. But this is where when you own something that's needed for solar, for electric vehicles, for aerospace, for defense, for electronics, and they can't get it, that's when I want to own it, because you can sell into that strength and make profits, right? Beat them at their own game.
That sums it up perfectly, Dr. Kirk, and I think that's a great spot to wrap it up. So where can our viewers find you? Where can they hear more of your commentary and learn more about what you have to offer?
Yeah, just either call us or go to our website and you can fill out a form for an appointment. That's KEPM. It's like Kirk Elliott Precious Metals, just KEPM.com. Or call us 720-605-3900.
It's been a pleasure having you on the pod. Appreciate it, man.
It's been great. Thanks a bunch.